Hi, my name is Lukman. My student number is 2025 to 21312, and we are presenting about a trend and comparative study of Dutch Lady and Power Root Berhad. So, let's get started. Moving to our first company, Dutch Lady began in 1963 as Pacific Meat Industries and quickly made history as the first meat company listed on local stock exchange in 1968. Next, we have Power Root Berhad, a Malaysian brand found in 1999 in Johor Bahru. They are famous for their herbal energy drinks utilizing local ingredients like Tongkat Ali and Kacip Fatimah. About the liquidity ratio, by comparing these two, Power Berhad displayed a much stronger and more stable liquidity position, indicating a massive surplus of short-term assets. For efficiency ratio, in summary, Power Root maintains an exceptionally strong liquidity cushion. However, Dutch Lady is far more efficient at managing operations. Moving on to leverage ratio, Power Root is the safer choice with massive liquidity and very low debt. However, Dutch Lady is far more efficient operator, moving inventory and collecting cash in just 30 days, whereas Power Root's collection cycle is significantly slower. Alright, for the last one is profitability ratio in our trend analysis. Our analysis shows two very different financial strategies. Power Berhad prioritizes extreme safety, maintaining a massive liquidity cushion and virtually zero debt. On the other hand, Dutch Lady is operational leader, demonstrating far superior efficiency by collecting cash and moving inventory cycle ahead of Power Root. Ultimately, Power Root offers financial stability while Dutch Lady offers operational agility.
Good day everyone. Today I will be presenting a comparative analysis of liquidity ratios between Dutch Ladies and Power Root Berhad. The current ratio remains below 1 for most of the years. Dutch Lady shows a low and fluctuating trend in 2024. The ratio stands at 0.84, indicating weak liquidity. Power Root Berhad display a very strong and increasing trends. Power Root Berhad improved significantly from 2.40 in 2020 and 11.27 in 2024. It indicates a high liquidity positions. Next, quick ratio. Quick ratio measures a company abilities to settle short-term liabilities without relying on inventory. Dutch Lady, the quick ratio remains consistently low, ranging between 0.32 to 0.64. Indicate a high depending on inventories, reflect weak immediate liquidity. Power Berhad maintains a very strong and stable quick ratio, mirrored its current ratio performance. Power Berhad demonstrates strong immediate liquidity. Next, net working capital. Dutch Lady shows fluctuating net working capital, indicates a period of cash flow pressures, suggests less stable short-term financial management. Power Berhad maintain consistently positive and strong net working capital, shows a stable surplus across the years, reflects effective liquidity and cash management. The unstable net working capital of Dutch Lady implies potential challenge in financial daily operations. Meanwhile, Power Berhad's strong supplies demonstrate its ability to operate efficiently while meeting all short-term commitments. In conclusions, Power Berhad consistently outperform Dutch Lady across all liquidity indicators. So that's all from me.
Hello everyone, my name is Najmuddin. Today I will compare the operational efficiency of two well-known Malaysian companies, which is Dutch Lady and Power Berhad, using key efficiency ratios from 2020 to 2024. Let's start with the average collection period. Dutch Lady shows a short and stable collection time around 24 to 31 days. This means they collect cash from customers quickly. In stark contrast, Power Root's collection period grew dramatically from 265 days in 2020 to over 3,200 days by 2024. Next, receivable turnover. Dutch Lady's turnover is consistently high, averaging 5 times per year, reflecting efficient collection. Power Root's turnover is extremely low and declining, averaging just 0.89 times. This means they are much slower at converting credit sales into cash. Now, inventory turnover. Dutch Lady maintains a healthy rate around 4 to 5 times per year, showing good inventory management. Power Root's inventory turnover is near zero across all years, suggesting very slow movement of stock or possible data inconsistency. which is a concern for operational efficiency. Moving to fixed asset turnover, Dutch Lady's ratio has declined but remained reasonably strong, falling from 5.23 to 2.21. Power Road's ratio is very low and falling further from 1.4 down to just 0.03. Finally, total asset turnover. Dutch Lady again performs better through slowing from 2.21 down to 1.35. Power Road stay at a much lower level, fluctuating weekly between 0.04 and 0.59, reflecting poor overall asset utilization to drive revenue. That's all from me. Thank you.
Assalamualaikum. My name is Alimara Asham. My student ID is 2025-223732. Now I'm going to present comparative analysis for leverage ratio. First, debt ratio. Overall, the study shows a significantly higher and increasing debt ratio compared to Power Road Berhad throughout 2022 to 2024. This shows that the study depends more on loans to run its business, while Power Road Berhad uses much less debt. Second, debt to equity ratio. The Shady's debt to equity ratio increased over time. This shows that the Shady used more debts than equity in financing their activities. While Power Berhad decreased a lot after 2022, it indicates greater use of their debt. For time interest and ratio, the Shady's ratio fluctuates from 2022 to 2024 as it increased in some years and decreased in others, while Power Berhad remains at zero throughout the years with no change.
Hi, Assalamualaikum. My name is Nurul Nadira binti Anan and my metric number is 2025624758. First, I would like to talk about gross profit margin. Dutch Lady shows a fluctuating but generally stable gross profit margin from 2020 to 2024. In contrast, Power Berhad maintains a constant 100% gross profit margin. Secondly, operating profit margin. Dutch Lady shows a fluctuating but generally low operating profit margin. In contrast, Power Berhad maintains a much higher and rapidly growing margin over the same period. Thirdly, net profit margin. Dutch Lady shows a bumpy but generally low profit margin. In contrast, Power Berhad maintains a much higher and more powerful profit margin, showing they keep a far larger slice of every profit they earn. Next, return of equity. Dutch Lady shows a bumpy but generally high return on equity, meaning that they are very good at creating profit for their shareholder. In contrast, Power Berhad show a much lower and declining trend, indicating they are struggling to give their owners a strong return of investment. Last one is return of asset. Dutch Lady shows a bumpy but generally stable return on asset, meaning they are still fairly consistent at using what they own to make a profit. In contrast, Power Berhad show an unstable trend that ends with sharp drops, indicating their assets have become much less profitable recently. In conclusion, from 2020 to 2024, Dutch Lady shows a steady and effective performance in managing its daily operations, while its cash levels are often low. The company is very fast at selling products and collecting payment from customer. Even though its profit margins are smaller compared to its competitor, it remains much better at using its asset and shareholder money to generate consistent return. In contrast, Power Road maintains a very high amount of extra cash and asset, giving it a much stronger safety net for paying debts. However, the company is much less effective and efficient as it takes an extremely long time to collect money from sales and struggles to turn its asset into revenue, while it enjoys much higher profit margins. On paper, its overall ability to give back a good return to its owner has weakened significantly over the years. So thank you.